February stats are in. Things aren't going as good as the industry would have you believe. Welcome to the Not an Agent channel, a weekly show about real estate with a particular focus on issues impacting Canadian real estate. We're not financial advisors, so please consult your financial advisor before making any investment decisions. My name is Jeff.
And I am Daniel. And this is the stats episode. It's going to be 2 episodes. And we're going to do this every month at the beginning of the month when the stats come out, the real estate stats come out. So we're going to break down in this video kind of the general stats, and in the next video we're going to get more into the nitty-gritty. And in this one we are focusing on the Lower Mainland, the Vancouver region. We're going to do a bit of a call out right now for anybody who's in the Toronto area looking at data, making graphs, yada yada. We've got a few feelers out, so by next month we should have. But if anybody else has a take on the Toronto market, let us know. So without any further ado, I'm going to send it over to Jeff to go over these stats.
Great, thanks, Daniel. So the stats that we're looking at today, the inventory is as of March 3rd, and we're looking at the Metro Vancouver Regional District. So that means everything from Tsawwassen over to Langley up to Maple Ridge, and then back down back over to Bowen Island in West Vancouver. So that entire region is what we're looking at for these statistics. So the first thing that we'll look at here are bracketed listings. So we're looking at listings by their list price. Everything from 0 to 100, 100 to 200. So we're looking at every 100K price bracket on this chart. We can see that this is peaking at the 400 to 500K mark. I have 1,083 listings there, very closely followed by that 500 to 600K mark. And then as we're pushing out, you can see those very easily. You can see where the $1 million mark is, because nobody likes to list their house for between $1 million and 1.1, or between 2 million and 2.1. So you'll see that you see those dips there, but that's where that market psychology on pricing comes in. So if we're really looking at this and trying to think, who might be buying, where's the market sitting for this? That 400,000 to 600,000, that's really your entry level buyer, somebody who's scraped together a 5% down payment, and maybe they're making a family income of 100K a year. That's who's in the market for those particular units. And we'll break that down a little bit further as we go along here. So if we want to take a look at the next thing that I'm talking about here is the age of a building. So when I talk about age of building, anything built this year was 0 years old, and anything built last year, 2019, is 1 year old. Anything built in 2000, well, that's 20 years old. So you can kind of, if you think about the past recessions and the booms and busts that we've had in the real estate market, you can see the dips and the peaks here on this market as well. What's very interesting to me, though, is the amount of new inventory that is sitting on the market right now. So you can see on the left-hand side, it peaks and it just spikes right off the charts compared to everything else. And this isn't just brand new 0-year inventory. This is over the past 2 years, really. So 3 years if you really want to go further. But so this year, last year, the year before, a lot of that inventory is still sitting on the market, or someone's bought it and it's coming back on the market already before they've had a chance to really enjoy it, or perhaps they've just run out of affordability for that particular unit. So that's what we're seeing in terms of age of building that's currently on the market.
And this chart is condos, detached, townhomes, everything?
This is everything except for land. Now, I want to break that spike down a little bit. So this is the inventory that's within that spike. So everything that was 0 or 1 year old, so brand new inventory. what are they priced at? That's what we're looking at here. So again, we're looking at the $400,000 to $500,000 range. So generally, newer units they're a little smaller. I don't know if anybody else has noticed this, but when you go into a new unit, you're thinking to yourself, where am I going to put my bed? It's because your bed takes up probably a tenth of the apartment. So if we take a look at how new inventory is stacking up against the overall inventory, these developers are trying to stay competitive because the overall inventory, you are getting a bigger unit in an older building, and you'll tend to get a larger house too if it's a little bit older for the same amount of money. So overall, the new inventory is trying to stay competitive with the older inventory that's on the market.
And this is starting. One of the things I noticed is it's starting around 300,000. So there are things that you can buy that are around 300,000.
Yeah, absolutely. So if you go, you might not find something for 300,000 in the downtown, but if you go a little bit ways outside of downtown, some parts of Surrey, Langley, even further out past SkyTrain lines in Pitt Meadows, Maple Ridge, you'll find some of those units there.
So considering this chart is 0 to 1 year old buildings, a $300,000 unit that's brand new or 1 year would have to be very small, I would imagine, like one of these bachelor or maybe 1-bedroom places.
Yeah, so something might even be 200 square feet, and that's not unique to Vancouver. That's but I think when you're looking at these small places, they're trying to get zoning for closets now as a bedroom, which is
right, and
incredible.
Put a bunk bed in the closet, really. Stack 3 people in there. Who knows?
Or like Cosmo Kramer, have them sleeping in the drawers of your dresser.
People are getting. Necessity is the mother of all invention. I guess that's what they need in Vancouver.
Perhaps. Perhaps. So if we take a look at what has sold, and these are sale prices now. So we're taking a look at what is actually sold, and oftentimes we're seeing things go for $100K under ask, sometimes $40K under ask. So this chart shifts over a little bit, but we're seeing that again. There's a very very sharp increase of sales in that 400 to 500K range. Again, closely followed by 500 to 600K. So that's really where we're looking at all of the sales occurring right now. Now, if you recall Daniel's video about price contraction and downward price pressure when the luxury market starts falling, we can actually see that in motion here. So if you take a look at the top end of this, the 1,000 piece of the inventory. Versus 436 sales. Well, that's about 2.5 months of inventory. That's a pretty strong seller's market. But as you start going up in price, for example, when you hit $1 million, at $1 million, we've had 400 sales versus 100 sales. So now that's 4 months of inventory. And then your next step, it starts compressing more. So as you're approaching that 2 million mark, well, now you're in a strong buyer's market up there. So what's happening is we're just kind of pushing all that inventory into lower pricing now. So that's going to take a while though. Like you probably won't get a deal tomorrow unless something drastic happens in Canada where, the markets just tank. But but it is happening. We're not seeing those $2 million houses sell often anymore.
It seems like both the builders know where to build the inventory they're building. These small condos for $500,000, and that's where most of the population is pushed. If you've got like an average job, that's what you can afford, and the builders know that, and as it's shown in these charts, that's where people are buying.
Mm-hmm. That's right. So in terms of sales prices, there's been a lot of the boards will be releasing that sales prices increased. A smidge, not very much, but that's off of last year. So last year, if you recall, nothing was selling. Things were sitting on the market for a long time. So the prices had to drop for people that needed to sell their properties. But if you look at this over a longer term trend, so 2018 versus 2020, the prices have actually dropped in that long term trend still. So we're down, not by a lot, but it is still by a little bit. If you're looking at detached, go ahead.
You've got the median. It's got the median price and the 12-month average price.
That's right.
So you can see where you could cherry pick what you're using for data, whichever suits your narrative better.
Exactly. And I think if you look here at April, I wouldn't be surprised if April turns out to be a little bit lower going forward as more of this inventory starts coming on. But if you look at detached, it's 3 million below, or 3,000 below, 30,000 even, $30,000 less, and attached is $20,000 less than 2018. So those prices are moving down. Overall for inventory, this one was the most surprising to me because all month we've been hearing inventory is at record lows. And then surprise, February ends and it's actually not. It's $2,000 or it's 2,000 units above what the record lows were. So right now we're sitting around 12,000 units for sale in Metro Vancouver. And the all-time low in recent history was 9,400 units. So,
and that's quite a sharp increase from the last point, which would be January. It's kind of moved up quite quickly. Yeah. And this is showing the seasonality of the market, which is important to keep in mind when someone's trying to control the narrative and they kind of forget about the seasonality of real estate. They're kind of missing a big part of the picture.
Yeah. And I think the other thing to keep in mind here too, Sam ran some numbers for me about 2 weeks ago, and we looked at which units went off the market and didn't sell. So canceled listings, expired listings. As of a couple weeks ago, there was 9,000.
9,000 canceled.
Canceled, right? Right.
So that's to break that down would be pretty interesting because we've got this whole strata problem. So some whole buildings can't get insurance, so they obviously can't sell. So I'm guessing if you're in a building like that and you had your unit listed, you'd probably delist it because there's no hope that you're going to sell it. And with the flu season in full effect, you might want people coming to look at your units. So that's another conversation we're going to have if open houses are still a hopping business right now.
Yeah. And open houses, I think, depending on the unit where it is, I've seen a lot of people through some open houses and not through others. So that's really a shakeup. But one thing that I have noticed in recent weeks is people are actually washing their hands before they leave an open house.
Ah, there you go.
So that's a new phenomenon that I hadn't seen before. So if we take a look at how many sales have actually occurred, again, the narrative that some of the realtors have been telling me is that sales have been really hot. They've been picking up. And they have been picking up versus last year, but not versus previous years. It's still, our sales volume's still pretty low. We're sitting at only 10 above the 2018, and 2018 was a pretty slow year to begin with in February. So, when we're hearing that sales volumes are picking up, again, it's that recency effect where you're only comparing it to the previous year and not to what's happened historically.
Mm-hmm. And in this one, you can really see the long-term trend. You can see the gyrations of seasonality, but you can see the long-term trend.
Right. Yeah, and going back to, like, if you take a look in 2013, there were almost 2,400 sales. And then if you take a look at February, it's the third worst month in that entire series, February 2020.
Mm-hmm.
Yeah.
Mm-hmm.
And then, to tie this all together, what this all boils down to is you're getting a better house for the same amount of money now. Buyers that have been sitting on the sidelines, there's a lot of us, and the reality of it is what you're buying today is bigger, better than what you could have bought for the same amount 2 years ago, and so that's really it's helpful for a lot of people that are buying now that may have been renting or living in their parents' basement for the last 2 years, because likely they've been able to save up a bit of their salary, increase their down payment a bit. Stress test is relaxed a little. Interest rates, Bank of Canada just had a 0.5% rate cut, so it all ties in together to affording a larger house in Vancouver. Will prices go up? They might, but if things start selling for more, my bet is that this price per square foot keeps falling because people are just spending more money on a bigger house than they would have got for the same amount of money 2 years ago.
Mm-hmm. Okay, so that was the general picture of what's happening in the Lower Mainland. In the next video, we're going to break it down by segment, the detached, the condo, the townhome, and kind of get into a bit more of the nitty gritty. So I will link that somewhere around here and in the description, and we'll see you there in that video. And this has been Not an Agent.
Not an Agent.